Hey guys, welcome back to Reserved Investments. You ready to take a random walk down Wall Street with me? Now, to be fair, it is a little bit hot. I mean, it's like 94 degrees in Boyertown, Pennsylvania, as of the filming of this video. New York is right up there. So if we're going to New York City today, it's going to be really hot, steamy. We're going to sweat a little bit. However, we can still take a random walk down Wall Street and get an education in finance, business, economics, and of course the collectibles trade. Now, in all seriousness, guys, this is probably one of the best books you can read on how to build wealth, understanding finance, the mindset that you should have going into these markets, whether it's traditional asset classes or alternate asset classes, which of course includes your cryptocurrency, collectibles, gold, silver, whatever it is that you're investing in. Now, to be fair, and I do want to state this because I know a lot of you are going to rush to Amazon or Barnes & Noble, wherever, and buy this book after this video. I did, however, recommend this book once before. This book does not really talk in depth about collectibles. This book is more a traditional finance book where pretty much you're going to come away reading this book that the best way to invest, spoiler alert, is through a stock-based index mutual fund over the long term. Said another way, total stock market index fund, S&P 500 index fund. With that said, there are two key paragraphs about collectibles in this book that I do want to read to you out loud, and then we're going to go over it in depth. And there's a lot of you that I don't think understand just how low the returns are on certain top tier asset classes in the antiques and collectibles trade. And the end of this second paragraph is really going to give you insight into that. So I just want you to listen to me as I read this particular segment. So here we go. Another popular current strategy is investment in collectibles. Thousands of salesmen are touting everything from rugs to Tiffany lamps to rare stamps and to Art Deco. eBay has made buying and selling collectibles much more efficient. I think there's nothing wrong in buying things you can love. And God knows, people do have strange tastes. But my advice is to buy those things because you love them, not because you expect them to appreciate in value. Don't forget that fakes and forgeries are common. A portfolio of collectibles often also requires hefty insurance premiums and endless maintenance charges. So you are making payments instead of receiving dividends or interests. To earn money collecting, you need great originality and taste. Now, to be fair, when we apply that to pop culture collectibles, obviously the point's kind of mute because a lot of people out there have an attachment to Star Wars. A lot of people out there have an attachment to Pokemon or Magic the Gathering or comic books. So you guys that are investing in pop culture collectibles, there are risks and rewards. Now, we're not going to go into that in this video. Maybe I will do another video talking about the risks and rewards of that particular market. But just to get to the gist of this, in my view, most people who think they are collecting profit are really collecting trouble. Now, this is where it gets interesting, guys. Even if you are fortunate enough to buy a piece of art that turns out to be a major masterpiece, you may still not have made a smart investment. Listen to this carefully, guys, because this is a great perspective. In November 2017, the painting Salvator Mundi, attributed to Leonardo da Vinci, sold at a Christie's auction for more than $450 million. Now, let's be realistic here. Obviously, everybody watching this knows that $450 million is an awful lot of money. Just to put this in perspective, $500 million is half of $1 billion. So this painting that sold for $450 million is literally 50 million shy from being $500 million with a B dollars. Jason Zweig, a financial columnist for the Wall Street Journal, estimated that the painting sold for the equivalent of about $500,000 during the early 1500s. Let me say that again. If we factor in inflation, this particular piece sold for the equivalent of about $500,000 during the early 1500s. It's now 2022. We're going back to the 1500s when Leonardo da Vinci first painted this particular work. The ability to say today that I own a Leonardo da Vinci painting may be priceless, but as a financial investment, it returned a paltry 1.35% from 1519 to 2018. Let me say that again, guys. If you would have purchased this particular piece, if an ancestor of yours had the means to buy this back in the 1500s, and let's say they paid $500,000 for this particular piece, and they kept it up until the time that it sold for $450 million, and they were the ones, their heirs, were the ones that sold this painting for $450 million. Are you aware your annual return on investment would only be 1.35%? To put that in perspective, the average stock market return over the last, literally, if we go back to when the stock market was first created, has been around 10%. Inflation right now in the US, let alone the rest of the world, is roughly 9%. So you would have only gotten 1.35% on a painting that sold for $450 million. Something to ponder, guys. Something to ponder. Just for your reference, I will put the title of this book and the author in the video description below. I will not put an affiliate link in the video description below because I do not want to make any money off of your decision to purchase or not purchase this particular book. It's just one of the books that I happen to recommend on this channel because, again, I teach about collectibles, and more specifically, I teach collectible finance on this channel. And remember, guys, fine art can be a great investment. But in this case, that $450 million painting didn't turn out to be too much of a great investment when we factor in the cost of it going back to the 1500s. Always remember, guys, if you're going to sell something, there's a buyer that equally has to do his own analysis to buy that particular item from you. In order for a transaction to take place, it requires two equal participants, a buyer and a seller. The price that they come to in agreement, whether it's at auction or through a private sale, is known in economics as what we call the equilibrium price. Understand this, learn this, profit from it, understand how these markets work. Thank you for watching. Let me know if you got anything out of this short video in the comment section below.